And hello, everyone. If you want to save $100 in just 2 years, you need more than wishful thinking or sporadic attempts at budgeting. Reaching a goal of this magnitude requires a clear plan, disciplined execution, and strategies that work together to maximize your results. It's not about cutting a few luxuries here and there or relying solely on a high-paying job. Success comes from combining multiple approaches that amplify your earning potential, reduce unnecessary spending, make your money work for you, and keep you accountable every step of the way. In this speech, we'll break down 4 essential strategies that, when applied consistently, can take you from where you are today to having $100 in your savings in just 2 years. You'll learn how to boost your income, eliminate wasteful spending, leverage smart investing, and implement a bulletproof system that ensures you stay on track. These aren't abstract ideas or quick fix solutions. They are practical, actionable steps that anyone can follow with focus and determination. By the end, you'll have a complete roadmap to achieve one of the most ambitious financial goals of your life and the mindset to see it through. If you want to save $100,000 in just 2 years, the very first and arguably most critical step is to focus on maximizing your income streams. Too often, people rely solely on their day job and assume that saving is all about cutting expenses. While budgeting is important, it can only take you so far. The reality is that hitting such an ambitious savings goal requires you to increase the inflow of money dramatically. The faster and more efficiently you can grow your income, the easier it becomes to reach $100,000 in a relatively short period. Start by taking a clear and honest look at your current earning potential. Are you being paid at market rate for your role? If not, it might be time to negotiate a raise, apply for a higher paying position, or even switch industries entirely if the long-term benefits are significant. A raise of even 10-20% can drastically shorten your timeline to your goal. But don't stop at just your primary income. And think strategically about additional ways to monetize your skills. Freelancing, consulting, tutoring, or online services are all accessible avenues that can supplement your main income. Even dedicating a few hours a week to a side hustle can translate into thousands of extra dollars per year, accelerating your path to $100,000. Another crucial approach is leveraging the power of the gig economy. Platforms for driving, delivery, virtual assistants, or freelance work make it easier than ever to earn extra cash on a flexible schedule. The key is not just to pick any gig, but to focus on opportunities that pay well for your time and skills. For example, freelancing in areas such as writing, graphic design, digital marketing, or web development typically provides higher hourly rates than low-skill labor gigs. By identifying where your skills are most valuable, you can maximize the return on your effort. Investing in yourself is equally important. Acquiring new skills or certifications can open doors to higher paying jobs or consulting opportunities. The money you spend learning a valuable skill is not an expense. It's an investment that can pay exponential returns over the next 2 years. Whether it's learning coding, sales, or advanced financial literacy, the ability to increase your income by investing in your own capabilities cannot be overstated. Passive income is another pillar of maximizing earnings. While side hustles and extra jobs generate active income, money you earn for the time you put in, passive income allows your money or assets to work for you. This could be through dividend, paying stocks, rental properties, or small online businesses. While these often require an upfront investment of either time or money, the long-term payoff is substantial. For someone aiming to save $100,000 quickly, even a modest passive income stream can accelerate the process by hundreds or thousands of dollars per month without adding more working hours. Networking is an often overlooked factor in income maximization. The more people you know in your industry or areas of interest, the more opportunities you have to find high-paying gigs, partnerships, or referrals. Surrounding yourself with ambitious and financially savvy individuals pushes you to find innovative ways to boost income and opens doors that would otherwise remain closed. Consistency and discipline are key. You need to commit to treating every opportunity to earn more as a strategic step toward your $100,000 goal. Track your earnings meticulously, analyze which efforts provide the highest returns, and double down on those. Avoid getting trapped in low-return activities that consume your time without meaningfully moving the needle toward your savings target. Ultimately, maximizing your income streams isn't just about working harder, it's about working smarter. Diversifying income sources, leveraging your skills, investing in growth, and creating passive streams collectively compound to give you a significant financial advantage. If you combine this increased income with disciplined saving strategies, reaching $100 in 2 years shifts from an impossible dream to a very achievable goal. The focus should be on both short-term gains and long-term sustainability, ensuring that you're not just temporarily boosting income, but setting up systems that continue to support your financial goals far beyond these 2 years. Once you've focused on increasing your income, the next critical step to saving 100,000 in 2 years is to slash unnecessary expenses ruthlessly. While boosting earnings is essential, it's equally important to control where your money goes. Many people earn a decent income, but never get ahead financially because their spending habits quietly drain their resources. To reach a goal as ambitious as 100,000 in a short time frame, you need to identify every area of waste and make intentional, strategic choices about what you allow into your budget. Start by analyzing your monthly expenses in detail. Track every single purchase for at least a month to gain a complete understanding of where your money is going. Small repeated expenses like daily coffee runs, subscription services, dining out, investment, or impulse online shopping can add up to thousands of dollars per year. It's not enough to glance at your bank statement and assume you're spending reasonably. You need to categorize and quantify every dollar to see the full picture. This process may be uncomfortable at first, but it is absolutely essential to identifying money leaks. Next, evaluate which expenses are truly necessary versus which are lifestyle choices you can temporarily or permanently cut. For instance, dining out frequently may feel convenient, but cooking at home can save hundreds of dollars per month without significantly impacting your quality of life. Streaming services or app subscriptions you rarely use can be paused or canceled. Even seemingly small savings, like switching to a more affordable phone plan, renegotiating insurance, or using cashback and reward programs strategically accumulate over time and accelerate your path to 100,000. An effective approach is to create a spending hierarchy. Separate your spending into categories: essentials, investments in yourself, and discretionary or luxury items. Essentials include housing, utilities, groceries, and transportation expenses you cannot eliminate entirely but can optimize. Investments in yourself, like education, skills, or health, are not wasteful because they contribute to your earning potential and long-term financial stability. Discretionary spending, such as entertainment, shopping, and non-essential travel, should be carefully evaluated and minimized at least until your savings goal is met. By prioritizing spending this way, you ensure that every dollar works toward either maintaining your livelihood or building your future wealth. Another important tactic is frugality with a purpose. This doesn't mean depriving yourself entirely. It means being intentional about your spending choices. Every dollar saved is a dollar you can redirect toward your 100,000 goal. Simple lifestyle changes like meal prepping instead of eating out, using public transportation, or buying high-quality items that last longer instead of cheap replacements can have a huge cumulative impact. The key is to replace mindless spending with conscious spending, where each expense is justified and aligned with your financial objectives. Debt management is also crucial when cutting expenses. High-interest debt like credit cards or payday loans can erode your ability to save because a significant portion of your money goes toward interest payments instead of building your savings. Prioritize paying down these debts aggressively while avoiding new unnecessary debts. Refinancing or consolidating loans to lower interest rates is another effective way to reduce outgoing payments and free up more money to save. Automation can be a game changer in expense control. Setting up automatic transfers to a dedicated savings account ensures that money is set aside before you have a chance to spend it. Automating bill payments prevents late fees, and using budgeting apps or spreadsheets helps you monitor your spending in real time. By removing the mental burden of tracking every expense manually, you create a system that enforces discipline and keeps your focus on achieving the 100,000 target. Finally, adopt a mindset shift from instant gratification to long-term gain. Every time you resist a small indulgence and redirect that money into savings, you're compounding your progress. Over 2 years, the cumulative effect of consistent, intentional frugality can be astonishing. By ruthlessly controlling expenses and being deliberate about how you spend, you not only free up substantial funds to save, but also develop habits that support financial independence far beyond this 2-year goal. Once you've maximized your income and cut unnecessary expenses, the next key strategy to saving 100,000 in 2 years is to leverage smart investing to accelerate your savings. Simply earning and saving money can get you part of the way there, but to reach such an ambitious goal quickly, you need your money to work for you. Investing allows your savings to grow at a faster pace through compounding returns, making the journey to 100,000 not just achievable, but significantly easier. The first step in smart investing is understanding the power of compounding. Money that is invested wisely grows exponentially over time because you earn returns not only on your initial investment, but also on the accumulated gains. Even modest monthly contributions, when invested strategically, can generate substantial growth over 2 years. The key is to choose investments that balance growth potential with risk management so you can confidently sleep at night while your money compounds. For many people, stocks and index funds are the most accessible and effective way to grow wealth. Investing in a broad market index fund or ETF provides exposure to thousands of companies at once, reducing individual stock risk while taking advantage of overall market growth. Historically, the stock market has averaged annual returns of 7–10% after inflation, which, while not guaranteed, demonstrates the potential for meaningful growth compared to a traditional savings account. By investing a portion of your income each month into these vehicles, you're accelerating your journey toward 100,000 without relying solely on additional earnings. Dividend-paying stocks are another powerful tool for accelerating savings. Unlike growth stocks that focus on price appreciation, dividend stocks provide a regular cash payout, often quarterly, which can be reinvested to purchase additional shares. This reinvestment creates a snowball effect, where dividends generate more dividends, amplifying the compounding effect. For someone targeting 100,000 in 2 years, even a relatively small dividend yield can contribute significantly to your overall savings when combined with disciplined investing. Real estate, particularly rental properties, can also play a role in wealth building and accelerating savings. While the upfront cost is higher and management requires effort, rental properties generate passive income and often appreciate in value over time. With the right strategy, rental income can cover expenses, pay down mortgages, and contribute to your savings goal. Even smaller scale real estate investments like REITs, real estate investment trusts, allow you to participate in property markets without the hassle of direct property management investment, providing both diversification and steady returns. Risk management is critical when investing, especially on a condensed 2-year timeline. While aggressive strategies can offer higher returns, they also increase the chance of losses that could derail your plan. Diversifying across asset classes, stocks, bonds, real estate, or even alternative investments reduces exposure to a single market downturn and provides a more stable growth trajectory. It's also essential to maintain an emergency fund outside your investment, ensuring you won't be forced to liquidate positions at a loss due to unexpected expenses. Tax efficiency is another factor that can dramatically improve your investing outcomes. Using tax-advantaged accounts, such as retirement accounts or specific investment vehicles, allows your money to grow with minimal erosion from taxes. Even outside retirement accounts, strategies like long-term capital gains planning and tax loss harvesting can save thousands of dollars, directly boosting your savings rate. Being deliberate about tax efficiency is often overlooked, but it's one of the fastest ways to maximize net growth. Automation can further enhance your investing strategy. Setting up automatic monthly contributions ensures consistency, removes the temptation to skip months, and allows dollar cost averaging to reduce the impact of market volatility. By combining disciplined saving, automated investing, and thoughtful asset selection, you create a system where your money steadily grows while you focus on maintaining income and managing expenses. Finally, mindset plays a crucial role in investment success. Think of investing not as gambling or a short-term scheme, but as a strategic tool that complements your income and saving efforts. Consistency, patience, and a clear plan are far more powerful than chasing high-risk, speculative opportunities. By integrating investing into your overall strategy, you not only accelerate your path to 100,000 in 2 years, but also lay the foundation for long-term financial freedom and wealth growth far beyond this goal. The final and perhaps most crucial key to saving 100,000 in 2 years is to create a bulletproof savings system and track your progress. You can earn more, cut expenses, and invest wisely, but without a disciplined system to organize and monitor your finances, it's easy to lose momentum. Saving at this scale requires structure, accountability, and constant visibility into your financial situation. The more organized and intentional you are, the more likely you are to reach your ambitious goal. Start by setting up a dedicated savings account specifically for your 100,000 goal. Keeping this money separate from your everyday checking or spending accounts reduces the temptation to dip into it for discretionary purchases. This account should be easily accessible but psychologically separate from your daily finances, creating a clear mental distinction between what is meant to grow your wealth and what is meant to cover day-to-day expenses. For many people, even naming the account something motivational like Freedom Fund or 100K goal can increase commitment and emotional connection to the goal. Automation is the backbone of a reliable savings system. By automating transfers from your checking account to your savings account on a set schedule, ideally immediately after each paycheck, you enforce discipline without relying solely on willpower. Automation removes human error and temptation from the equation. Dollar cost averaging applies not just to investing, but also to saving by regularly setting aside a fixed amount. You steadily accumulate wealth without having to think about it each day. Tracking your progress is equally important. Break the 100,000 and target into smaller, manageable milestones, monthly or even weekly goals. Seeing tangible progress regularly creates momentum and motivation. For example, if your target is 167 per month, you can monitor weekly savings to ensure you're on track. A visual representation like a progress bar or chart can reinforce your commitment and make abstract numbers feel real. This constant feedback loop is psychologically powerful. It encourages consistency and keeps your eyes on the prize even during challenging months. Budgeting should be integrated into your savings system. Establish a framework that aligns with your income, spending, and investing strategies. A simple 50-30-20 or modified budget can help you allocate funds efficiently. Essentials, growth investments, and direct savings. More advanced methods include zero-based budgeting, where every dollar has a purpose, ensuring that nothing is wasted. The key is not complexity, but clarity. Your budget should clearly show how much is going toward your 100,000 goal and reinforce your priorities. Emergency planning is another critical component of a bulletproof system. Life is unpredictable, and unexpected expenses can derail even the best laid plans. Maintain a separate emergency fund of 3 to 6 months of living expenses, so you never need to touch your 100,000 savings for unforeseen event. And knowing you have a financial safety net allows you to stay disciplined with your main savings goal without panic or reactive spending. Accountability amplifies success. Share your goal with a trusted friend, partner, or mentor who can provide encouragement and hold you responsible. Regular check-ins, whether weekly or monthly, create external pressure to stay consistent. You can also use digital tools, apps, or spreadsheets to monitor your progress. These tools allow you to see exactly how much you've saved, how close you are to milestones, and whether adjustments are needed. Being proactive and data-driven prevents complacency and ensures your plan stays on track. Finally, mindset and discipline are essential in maintaining a bulletproof system. Saving 100,000 in 2 years requires persistence and the ability to make decisions with long-term benefits in mind. Celebrate small wins along the way to maintain motivation, but always keep the ultimate goal in focus. Consistency over time compounds more powerfully than sporadic bursts of effort. By committing to a systematic approach, tracking your results, and adjusting when necessary, you create a resilient framework that turns your ambitious savings goal into a reality. This system isn't just a method for reaching 100,000, it's a blueprint for financial discipline and wealth building that can be applied to every financial goal in your life. It transforms saving from a reactive or stressful activity into a proactive, structured, and ultimately empowering habit.